thanks everyone for turning up today for the third part of session 3 of 3 of getting started with EdgeRater. Now, in the prior weeks, we've talked about, session 1 was about basics of symbol lists and data, where does data come from, viewing charts, what to do with reports, how to manipulate reports. Week 2, we looked a little bit more into templates and reports. And then today we're going into the what I would call the backtesting side of EdgeRater. So it's kind of the other half of the program. If you actually look at the tabs at the bottom, you've got the trade simulation tab and the entries and exits tab, and that's what we're going to be talking about today. It's still a getting started series, so I'm not going to assume that anybody knows anything about the backtesting features. So if you do know what I'm talking about already, I apologize for that. But this will be good to get everybody to a certain level. And then as we go on, we can certainly do more webinars on more details. So let's see. That is the last slide I have. Even though you didn't see my disclaimer for some reason. Okay, well, here we are. This is for educational purposes only, and you are solely responsible for your own trading decisions and actions, and I'm sure everybody knows that. Where to find more information? This is important. After the webinar is done, you should go to keep track of what's going on by subscribing to the mailing list. That's the primary way that I contact people and let people know about webinars that are coming up. So let's show where you can sign up for the mailing list on the website. Every email that you receive, you'll notice at the very bottom of the email, there's always an unsubscribe link. So you can click on that if you don't want to receive any more emails from me. There's no obligation to keep getting my emails. If you have clicked the unsubscribe for some reason and you want to then come back and continue to receive the emails, just come to the bottom of the web page and subscribe to the mailing list again. And you may have to opt in again. You might receive another email which says, "Are you sure?" And just click on that. But that's the primary way that I keep in touch with people. The YouTube channel is also an important channel to subscribe to. So you'll find a subscribe button on there. And if you subscribe, there's another option to enable notifications. And if you enable notifications, then you get notified whenever a new video is posted onto the YouTube channel. So, you know, even if you've missed all the signups for the webinars, eventually the recordings will make it onto the YouTube channel. It may be several days later, so it's always better to come live to the webinars. And also, if you the other important thing about signing up for the live webinars is you'll receive a link to the recording specifically. So keep doing that, and you will get access to the recordings before everybody else. But yeah, so make sure you subscribe to the channel. Currently, there's 1,000 subscribers still, which is good. And if you haven't done so, click on subscribe. Okay, so today is all about backtesting. So if we're in EdgeRater, we've already seen the templates tab. If you look at the bottom of the screen that I'm showing right now, you can see there is a templates tab, a reports viewer, and then the last 2 tabs are entries and exits and trade simulation. So I'm going to be using both of these tabs today. And I'm also going to look at the reports viewer because this gives me a chart that I can actually show what we're looking at testing. Okay, so you can probably see this chart. What I'll do is I'll just drag this chart to make it full screen. I'll drop it in the center here. So now that's a full chart in the reports viewer tab. So what I thought I'd do today is to keep it simple in terms of the test that we're going to do. So everyone knows about moving averages. what I thought I would do is show how you can test various moving averages, crossovers, for instance, to see if there is any edge, and you can run that against multiple stocks or a single stock. But let's just go ahead and build this up. And it's a very visual approach to start with that I'm going to show here. If you have any idea of a particular system or scan that you'd like to test, then it's always a good idea to come into the chart side and try and develop a script, or maybe there's a script that exists already that you can then drag into the chart area, because that will just show you whenever the conditions are true that you're looking for. So, okay, in the chart scripts part of the window, you've got several categories here. System scans is really where all of the scanning scripts are. And what I'm going to do, I'll just scroll down in here and I'll find the one that I'm looking for today. It's called MAU. It's basically a moving average crossing up. If I double click on that, you'll see what I mean by a visual indication. So this MAU gives you a one value, and I call that an event. It's called an event in EdgeRater whenever it's a one value, whenever this particular condition is true. This condition, you can always find the contents of any of the scripts in EdgeRater by selecting the script and then selecting the edit. And you'll see the screen here shows this is basically just detecting a cross of a fast moving average over a slow moving average. And it's in the up direction because of the way that these parameters are. If you reverse the order of the parameters, it would be detecting a cross down. But this one is looking for a cross up. Now, whenever you're creating a scanning script based on indicators, it's always a good idea to put those indicators on the chart. So if I just go down to system indicators and I'll look for my moving average indicator. Okay, so there's this simple moving average is what I'm looking for. I'll drag two of these over. Okay, currently they're set at the same period, but I'll change the values here to 22 for one of them and 50 for the other one. So now what we've got on the chart is a nice visual representation of what we're trying to test here. So you can see that whenever the red line is the 22 period moving average, whenever it crosses through the 50 period moving average, this scanning script puts a one value. And that's really all the scanning script is doing, a one value whenever you get this cross. Okay, cross down, this script does not detect cross downs. For a cross down, you have to use the MAD. That's moving average cross down. I can just drop that on here. And the default parameters for these two scripts are 22 and 50. You can always change the parameters of the script by opening the formula parameters box. And then in here, you see I've got 22 and 50. And of course, you can change that to these to any periods that you like. I'll leave it set to 22 and 50. But here you can visually see the test that is gonna happen. What I'm trying to do here is detect crosses above when the 22 period moving average crosses above the 50 period moving average. And I want to run some kind of trade simulation on that to figure out whether these particular crosses have any significance, will give you an edge. And so in order to do that, you have to kind of think about what the exit might be. We've defined an entry here. Now the exit could be, and I think to start with, what we'll do is we'll just say a time-based exit. So eventually we'll use the cross down as well. But to start with, I'm just going to use a time-based exit. And I'm going to say 10 bars. Okay, 10 bars. So basically the idea is enter a trade whenever this moving average crosses here, hold for 10 bars and exit on the close. Okay, so visually, that's what we're going to do. So let's go now to the entries and exits tab. This is where we'll set the simulation up. So in the entries and exits tab, I have to define my set of entries. And that is the script that I added down here, MAU, moving average crossing up, gives me a 1 value whenever that condition is true. So in entries and exits, I'll search for the MAU. It's down here, MAU. I'll double click it and it will come in here. It's got the default values for the parameters of 22 and 50. And what I'll do for now, just to show what's happening, it's much easier to show if I just select a single stock rather than everything in this S&P 100 list. And why don't I just select the stock that I've already shown over here? That's Adobe, ADBE. So I'll come back over here and I'll just select ADBE. And then all I have to do is hit run here. And this is just going to generate the entry signal. So you can see the date columns and then the name of the stock for that has that condition on that date. So if you ran it for multiple stocks, for instance, let me just show you how that works. I could say run, and now you see these get, you start getting more and more as you run more and more of these. If I ran the whole list here, then okay, now I've got every single stock in the S&P 100 showing me the signals for each day for scrolling back over here from 2012 to 2022. So immediately you've got a nice visual indication of the visual indication of when those stocks have that condition. And now what I like to do is just double click on these because that will bring up a chart. Let me just go back to selecting Adobe only, click on run again. Okay, now let's bring up a chart. So if I double click on any one of these, it's going to bring a separate chart, not the one that's in the reports viewer. This is now a standalone chart viewer. And I want to make sure it's got my my moving averages on. So this has got a 50 and a 200 because that's the way that I had it set up. But what I want to do is put on the 22 and 50. An easy way to do that is go over to here, save this chart layout. I'll call it MA 22 and 50 of this layout. And all I have to do then is go back to my window independent chart viewer over here and load that layout. So I'll just go to chart layouts and I'll just say, come down to my layouts, and I've got this MA 2250 with the cross events. So that's now set the moving averages up, and I've got the events down here too. You don't have to do this step, but I think it's useful because as you scroll through this list of signals, you can just verify. And if I turn on annotations, I can see exactly the events that's being looked at as I'm clicking through this list of events. I think it's just very useful. If you're designing your own trading strategy, make sure you have the indicators on and the events on the chart just to verify that you've done the right thing and you're looking for the right conditions. As I click through these, I'm always just making sure here that it is really a moving average cross up. Because it's easy to put in the wrong code and accidentally do something you're not expecting. So it's a good idea. Check through a couple of them. You don't have to check through them all, but just visually make sure that you're looking for the right criteria. So everything seems good here. So these are entry signals. Okay, there aren't many. If you look at the whole of this period, you've got it's 10 years of data really. So there's been, I would say that's probably roughly 20 occasions where the 22 period moving average has crossed through the 50 in Adobe. And I'm not going to go into the exits now. If you want, we will in a minute. But for now, I just want to look at the entry on its own and see what happens 10 days after that entry has occurred. All right, so go into the trade simulation tab, and that's going to now make use of those events, those entry events that have already been set up. And all we have to do is set some entry rules in here. So I can say whenever there's an entry event, go long, go long on the close of the bar. You could choose next bar on open or next bar under some condition, but I'll choose the close of the bar that had the event. And then my exit rules are going to be exit after a fixed period. And I'm going to choose 10 days. Okay, so it's not choosing an exit event, just a pure fixed hold period. I've got no stops set in here. And then the portfolio rules, I'm going to say don't allow duplicates. The duplicates thing is if you happen to get two signals whilst you're already in a trade and you get another signal for that same stock, if you allow duplicates, then it will allow the trade simulation to take that second position. But if you don't allow duplicates, only one entry is allowed per symbol, essentially until that trade is exited. So that's really the only settings I'm going to put in here. The others are defaults, basically simulate it with $10,000 per trade, set my initial equity to $100,000. Put in this interest rate, but that's risk-free rate of 1%. Commissions 0, so I'm not factoring in commissions here. And yeah, pretty much that's it. And all you have to do is go to the run button, hit run, and it's going to take every one of those entries and hold it for 10 days. Now, the reason it says 11 days under the H column here is that the choice was to enter the close of the signal bar. And then if you look at the exit rules, I said exit next bar on open after 10 days. So that actually makes it the 11th day of trading. If I said event bar on close and run again, we should find that that is a 10-day hold. Okay. Once you've got the trade list, also, I think it's a good idea to open up the chart viewer, because now you've got more information. You'll actually see on the chart the entry and the exit. And as I go down through this trade list, it'll just show me all of the entries and then the exit and then the reason for exit reason, which in this case is a hold period. So it's just 10-day hold. There's no technical criteria for exiting. So in Adobe over those 10 years, was this a profitable, should we call it a system? Yeah. I mean, it's a system, right? It has an entry, well-defined criteria for entering, and pretty much a well-defined criteria for exiting, although that exit is not based on any technical criteria. It's just a fixed number of days. But sure, it's a system. Okay, so let's close this down. What other information can we see on here? So this is the trade list. It's very important. The P&L distribution is useful to look at. This will show on the right of the blue line here. The blue line is essentially a 0% line. So anything to the right of that, these are trades that made gains. The further you go to the right, the more percentage the trade made in those 10 days. And over to the left are the losing trades. And then the further you go to the left, you're getting into this trade here, which lost between 6 and 7%. So you can immediately see from here, because there aren't that many trades, that there were 3 losing trades and the rest were winning trades. Total of 23 trades. There was a profit in here of $4,853. In the lower area, you can see a graphical representation of each of these trades. So you can see the ones that were winning, which are the green ones, and the ones that were losing. Now, I did say there were 3 losing trades. There are actually 4. This bar here, between 2 and 3%, there were 2 trades in that between 2 and 3%, negative 2 and 3%. Okay, and you can see that on this chart below. Those were the red bars, 1, 2, 3, and 4, and all of the other trades were positive. If you wanted to change the granularity of this, because it's currently showing 1% granularity, we can change that to say 0.5% over here, and now it further splits that up into a little bit more granular definitions. So So that's a good one to come look at. The other thing is the summary of the trades is to tell you the total number of trades. How many of those trades were winning trades? How many were losers? We already know that there were 4, but it's nice to see that here. When we run this through thousands of stocks, you will not be able to count them all, obviously, on that chart. So obviously you look in here to see the number of winners, number of losers, and what that represents in terms of percentage out of all of the trades. How many of those were winning trades? How many were losing trades? And then you've got other information in here too, which you can take a look at. But the top area is kind of very important basic information. Number of trades, what percentage of those are winning trades, what percentage were losing, and what was the average winning trade, what was the average losing trade. So here, with this system on Adobe, you had 82% winning trades, 17% losing trades, and roughly the same percentage profit and loss. Now, but because you've got more winning trades than losing trades, makes this particular system work well on Adobe over the last 10 years. You can also take a look at the equity chart. That will, I'll remove the index and we'll just see the equity as each trade gets taken, how that affects the equity. You see a steady rise in that. So it looks like a decent system for Adobe over the last 10 years. So then what happens if you want to take a look at that over more stocks? So let's just go and run this on the whole S&P 100. Click on run. Okay, so now you see how fast that was, but it's basically giving you events for 100 stocks over 10 years. And all I have to do, obviously I could look at this and go and look at charts, but I just go over to trade simulation. Now I've got a new set of those events are in the entries and exits tab. All I have to do in the trade simulation tab is hit run again. Well, let's see what happens. So now using all of those stocks, we have quite a nice looking chart up to around July of 2018. Then it looked like it had some trouble there, but overall, that was a winning strategy for those stocks over the last 10 years. But bear in mind, this period here from 2018 to 2020, which is a 2-year period, essentially ended up in a drawdown. So that's a long time to be in a drawdown and still keep trading a particular system. However, this, what you'd really like to see is a nice rising graph like this. So this is trouble here. But then it did, after the COVID situation, it did come back to make new highs. And now it's in a bit of a drawdown again. I'm not trying to show a system that's a great system to trade. I'm just showing you how to test various ideas. And I would never recommend this as a system to trade, but interesting to see the results. So yeah, so that's using a fixed hold period. Okay. So far, any questions so far? Does it make sense to everybody so far? Okay, great. Yeah. Okay, that's a good question. How would you set this up if you wanted to short? If you wanted to short on the cross down? Okay, so let's go back to the chart again, and this time we'll just kind of show graphically what we're talking about to start with. So I'll zoom here. Okay, so if instead of buying on the cross up and holding for 10 days, what if you wanted to short on the cross down? So that's the MAD scan. Okay, so what we would do is we'll go in entries and exits. You go to MAD, put that over here, set your parameters up. I'm going to keep them at 22 and 50, and I'm going to hit the run. So now I've got cross downs. Now I just go over to trade simulation And this time in the trade entry rules, the entry is going to be a short entry. Everything else remains the same. And I can click on run here. Okay, so shorting on a cross down, this is the result. It's a basically losing strategy, consistently losing, except in periods of big market sell-offs, like I believe this is the COVID sell-off, the COVID crash here. This system of shorting on cross downs did well. But in times when the market's rallying, it's not doing well at all. And then recently, interestingly enough, it really hasn't done that well, even though the market, we were in a bear market, but I believe we're out of the bear market criteria at the moment. So yeah, it's interesting to see that, but easy enough to test in the program. So another question is, can you combine systems so that you're always in? Yeah, so in the entries and exits, this will allow you to put one scan in the entries and exits only. So if you wanted to combine scans, you would have to make sure the script gave you that event for the criteria you're looking for. In if you had multiple entry criteria, you'd have to say, this criteria or the other criteria. But in terms of like complete systems, combining them in an easy way, it will not do that. It will just give you the one selector, it's called in here, basically. And then you can say long or short. Now, another thing that is possible to do that I don't really want to get into at this time, but it's possible to write a script that defines entries and exits in one script, so that you don't have to drag two scripts into this area. If you don't, that might not make sense now because I haven't shown you the second script. Remember, we're just dealing with entries and we're holding for 10 days, but it is possible if you're designing a system that you will have technical criteria for your entry rather than a fixed hold period. And so you'd put that script in here. So for instance, let's take an example of moving average crossing up for your entry to generate the events here, and then go to the exits. And then I'm going to say moving average crossing down for the exit. And we'll use the same values, 22 and 50. This is clearly not going to be a great system. But there you go. Now you've got entries and exits. Now, if we go to the trade simulation tab and I click on, now I want to make sure that I'm not doing a fixed hold period. I want my exit rule to be the exit event. But again, I'll exit on the close. And then just press run. Okay, so if we go to the trade summary, we'll see that in this system, there were overall 2,500 odd trades, slightly more winners, 53% more winners than losers. The winning trades had an average of 5% win. The losing trades had an average of 13% loss. So this is a big negative system. If we look at the trade list, and with the trade list, this works very similar in a very similar way. You can interact with this in a very similar way to any of the template reports. In that, if you click on a header, okay, so I'm clicking on the headers here, it's going to sort by the either the high to low or low to high. So ascending sort or descending sort. And if I double click on a trade, that trade will be shown on the chart with the entry. This time the exit, you'll note, says exit event. It's not a hold period. And if you look at the chart, you'll see why it exited. The entry was right here on this moving average up cross event. The exit was here on this moving average down cross event. And this was a long trade. Remember, we said, So what I've done here is I forgot to change this back to long. That's why things are kind of back to front here. So let me just go and do that. You probably noticed that nobody said anything, but here we go. I left the entry rule as a short entry rule. That should have been a long entry rule. Let's run that. That will actually end up reversing everything. Turns out to be a great system. And let's look at the equity chart. So it's now the opposite of what we saw, because now we're going long instead of short. Okay. The P&L distribution, we can see there's a lot more trades in here. It's 2,500 trades. So you can take a look at the distribution of winning trades to losing trades. Here's the blue line. And you see, by just sort of visually looking at this, you can see that there were a lot more trades on the left-hand side of the blue line. So, which is interesting. If we look at the summary, yeah, we'll see that there were 1,300 losing trades, 1,200 winning trades. And this time it's the winning trades that had a 13% P&L profit, and the losing trades had a 5% loss. But overall, the equity chart looks reasonable. It's going up in this nice way. If we go to the COVID area, you can see there was this drawdown in this system during COVID. And we currently are in a bit of a drawdown. It's nowhere near drawn down as much as the market. So yeah, it looks fairly reasonable, but it's not a system that you could reasonably trade yourself, because the number of open trades at any one time is really high. You can always tell by looking at the open positions at the bottom area to see on any one day how many positions are open. All right, 85 positions are open. 85 positions. This was simulating a $10,000 per position. So that's quite a lot of capital you would need to trade those. I did not limit the system to using only available equity. So it's continuing to put $10,000 into every single trade, even if the account goes negative. But I like to do it that way because it shows me more of a statistical analysis of the trading system rather than making it a function of your equity and money management. So anyway, so there we go, 22 and 50. So those, let's go back to look at the trades again, because that was where I got caught up before. So here's a trade. The best trade of this whole system was Tesla. And the entry in Tesla was down here on this. If we put that on the right-hand side of the chart, always good to do that. You can see what the trade would have looked like on the day. So if I go over to here, okay, so that's what the trade, that's what would have happened. What in your chart, you would have seen a massive jump in price, probably on high volume. I don't have volume on this chart. I could easily put it on, but I won't. That's not where we're going right now. And then if you'd have held this trade, you'd have been underwater for a few days, didn't fire an exit because the moving averages didn't cross down. And eventually it sorted itself out and started to rise, and then started to rise quite quickly. Eventually, the moving averages did cross down right here, and the exit event was fired. But that was a 269% gain in that one trade. That was the best trade of the whole system. There were others that had similar. Let's just let's have a look at some others. NVIDIA had a similar gain. Okay, so what you can glean from this is that a system like this is a trend system. And the money is made by holding for a long time. If you have strict rules in trading, you can hold for a long time. is often tempting to sell for an early profit. If you've had losses in the past, it's often tempting to take you might think that move from here to here is a great gain, and you might take that. But if you'd have held on for a long period, you'd have made much more money. And that's the kind of how a trend trading system works. You really make the big money by holding on for a long time. And it's those top 10% of stocks that really do make the money. So we can just quickly scroll down through the list, and you can kind of get a feel for the good trades here. You can also reverse this list and then look at the bad trades. So the worst trade here was a 33% losing trade. Okay, you can see that the entry was the moving average crossing up here. If you held until the moving average crossed back down, then there you go, NVIDIA 33% losing trade. That's a 21-day hold. Nasty one here with this gap down, and so on. So, but what I'm showing here is a very simple definition of a trading system. As you start to look at these on a chart, you can always come up with extra rules. That's kind of the way you tend to work through backtesting. Is in your mind, you know that you would not be holding this trade in certain situations. And so you can add that as a rule to your exit. And eventually, as you go and refine your trading system, then you can end up with something that is better than a simple moving average cross. Okay, so we have a test here. The obvious thing for most people here is to say what about those parameters you chose, 22 and 50? Are they the best possible parameters that you can have for a moving average cross system? Well, you probably want to test many different variations on these parameters. And that's what we're going to go and see next. First of all, I'll take any other questions. I see a question here. The win percent on the whole list. Okay, so what is the win percent on the whole list? So if we go back to the trade summary, and the win percent on the whole list is this number here that's under winners and trade count percent. So that'll be 40, in this case, 46% winners on the whole list. All right, what I'm going to do next is show how to vary these parameters and run what you can think of. The way I think about what we have just done is that this is a very manual process. Okay, it's nice and visual because you get to look at charts and kind of design a system, and you get to do some testing using the trade simulation tab and then pressing run. But it's a very manual process. I had to drag in the entries and generate those. I had to generate the exit events. I had to go to the trade simulation tab and set all of these parameters up, and then press run again, and then look at the results. So it's quite a manual process. So there is a way to automate that in a batch process. And so I'll go through that now. Before I go to that, are there any questions on what we have just done? That's cool. So I think it's making sense. That's good to know. Right. So how do you set up a batch process? Well, let's open up. To set up a batch process, you have to use Microsoft Excel, and I'm going to show you how to do it. It's actually quite straightforward. So go into your EdgeRater folder under trade simulations. That'll be under configuration, and then trade simulations, and then system. And there's a document here called read how to use trade simulations. You can open that, and it will give you the lowdown on how to set up a batch run. So you could read that. I will show you how to do it. So basically, take any of these already existing trade simulations in here. For instance, sim days hold. you'll see what's going on here. This is a definition of everything that we've just done. You can think of as being one row in here. Okay, so I've given the row or that particular system a tag. This case is called hold1. The entry script is always true. It's not using an exit script. It set the hold period to 1 using fixed hold period. And then there are various others down through here, all the way up to holding for 50 days. That's just the definition of one row is the definition of one set of parameters. So probably the easiest way to run this, or the easiest way to configure this, is just to make a copy of what's already here. So say I'm going to copy this, Control-C, Control-V, and I won't keep it in the system folder. I always put things so I'll Control-X and then go to the folder above there, because the system folder contains the trade simulations that are delivered as part of EdgeRater. So you don't really want to put your own things in there because you get confused about what was delivered with EdgeRater and what's your own. So you put it in the folder above. And then I might call it something more appropriate. I'll call it's a simulation, sure. I'll call it MA cross simulation. I'll open it up again in Excel. I'll delete essentially everything, all these other rows. And this time I'll just configure what we've already done. Okay, so it's basically, this is MA cross, which I'll call MA, remember it was MAU, MA cross up. I'll call it 2250. That's just a tag that you're going to be able to identify that particular run when we look at the reports. The entry script. The important thing to remember about entry scripts is if the script is in the scanning area, system scans, it has a name of that's preceded by scan dot. Now, if I show this on a chart, all right, and I bring up the formula parameters for this MAU, you can see the name of the script is actually scan.mau 2250. That's the name that you need to, yeah, thanks, Brock, we'll see you. That's the name that you need to put into the spreadsheet. So come down here, and my entry script then is going to be scan.mau brackets 22,50. My exit script, you can guess what that's going to be, scan.mad 2250. Entry bar, this bar close, use fixed hold period is false. Hold period doesn't matter because it's false for the fixed hold period. And the exit bar is this bar close. Allow duplicates, I'm going to set to false as well. So you'll get the idea. It's basically this one row is mimicking exactly what happened, the settings that were put into the entries and exits tabs and the settings over here. Okay, but it is a manual process to set up your configuration. The good news is once you set the configuration up, it's an Excel file stored on your hard drive and you always have access to it. And you can just copy to new configurations as you go along. All right, so now I've set that up. I'm going to save it. And what you can do then is in the templates tab, there is a script called, a template called trade simulation batch run. You'll find that under trade simulation batch run here. And what you would do is you choose this input configuration file. So if I click on file, and here's my sim MA cross file. The output folder, let me just, for example, and I'll show you how this all works, but I'll say this is my MA cross test. All right, I won't override the dates. So what that means is your symbol list has a certain number of years of data associated with it. As you know, if you look in the list itself, this particular one has 10 years worth of data, okay, from 2012 to 2022. So you could choose to override the dates that are in that list to something, a particular period within that data that's already in there. Or you could just say, no, I don't want to override the dates. I want to use the dates. And to say no, I just entered a 0 in there, as it says here. I want to use the dates that are the full amount of data that's available in this symbol list. And then I just hit run. Okay, this has produced a result. You can see it's a summary. So the tag MAU 2250, there were 2,500 total trades with an average gain of 3.37%, average number of bars held, and average win rate. If you want to see the full trade list for that, you can select this row and select open linked document. And this is now the full trade list that we have already seen by doing it manually, but now this has been generated using the batch run. And obviously I can, do the same chart thing that we always do. This time I'll put the chart over on the right-hand side. And when the chart's blank like this, it means you really need to press this zoom out button. That's something that I would say often happens, but it does happen. And you press the zoom out button, that will give the chart back. And now you can just scroll down through. And if I turn on annotations, that's good. Okay, so we can see the entry and the exits. And as I scroll down through this list, these should be exactly the same entries and exits that we had before. And it's just a way that you can verify that the system is doing what you expect. So there's an entry whenever there's this 22 period moving average crossing up through the 50. There's an exit whenever the 22 is crossing down through the 50. So it's picking out exactly the right trades. It means that configuration file is set up exactly correctly. So we're good to go. Now, what do you want to change the parameters or see different parameters compared to the 2250? We'll go back in here. We'll copy this row down here, and maybe we'll choose parameters such as I'd like to see the 510. All right, so moving average, the 510, and then exiting when the 510 crosses down. And you can mix and match these. You could say you want to do a 2250 crossing up and a 510 crossing down. You can just put them in as separate configuration rows. So we'll go 510 here for the cross down, leave everything else the same, save this, go back to the batch run template, over to templates. We're using it's the same configuration file, so we don't need to do anything different here. And everything else is the same. I'll just press run again. This time after the run, you should see that there are 2 tags in the report. Here they are. Let's just pop that into here. So the 2 tags are MA2250 and MAU510. This had a lot more trades, as you would expect, because we're using shorter moving averages. The average number of bars held are shorter in here, and the average wins, the percentage of wins are smaller. The average percent win is smaller too, as you would expect, because we're using shorter period moving averages. To see this trade list, you click on Open Linked Document. And now we should be looking at 510 crosses. Bear in mind, my chart is still set up for 2250 crosses. So this is a process. We have to go and change this. So we'll go to formula parameters and we'll say we're looking at 510. I'm just trying to just verify that it's picking out the right things. And if I can visually just see that by looking at the 5 and 10. So yeah, that's a 5 cross up right there. And this bar is a 5 cross down just right there. So that all makes sense. When I'm looking at this linked report, it's immediately showing me the trade list, but it also shows me the trade summary. These are, if you look at the very bottom of the screen, you're seeing various worksheets that are within this simulation report. So I can still see the summary, just like if I had run it manually and I'm looking over at trade simulation over here, this has generated exactly the same report, but now I'm looking at it in the reports viewer. Okay, so I can go and analyze the actual statistics in here of this particular system. And so this turns out to be a good way of looking at multiple parameters. So you could copy this row. It's very easy to do in Excel to copy a row down 100 times and just change the parameters in here. There are automated ways to do that in Excel if you know anything about Excel, or you can just type in the parameters yourself. It's probably the easier way to do it. But you can end up with multiple rows here. So let's add a row just out of interest. Control C, Control V, and we'll call this, we'll look for the 2250 for the up and the 510 for the down. How about that? 510 for the down. That's quite the tag there. So let's go. The entry script is 2250 crossing up, and the exit script is 510 crossing down. Save that. Go back over to EdgeRater templates. Just click on run here. Now it's going to run 3 completely separate simulations. Each one of those rows is a separate simulation that's going to be run. And here are the results of that. Okay, so this new one is there were 2,500 trades with average gain of 0.63%, average number of bars held 12 bars, and a win rate of 44%. Let's go and open the linked document. So we'll actually see the trade list here, and I'll go over and look at the summary, which is, the actual summary here. So the information that came up on this report, the batch run summary report, where you see the count, the average percent number of bars, and the percent win, that was extracted from this document. Yeah, all trades. The average win. Let's just put that below there. You'll see this much easier. So percent win 44.97, win is 44.97. Number of bars held 12. That should be in here. Yeah, trade length days 12.39. So it's just rounded it up. And the average percent winner, the average percent overall, average percent 0.63%. So this gives you a summary of the full report, and you can always open the linked document and see the full report. But if you're just testing multiple parameters, and you may have 10, 20, 30, 100 of these things, it's just much easier to see them all row by row in here. So that gives you a good idea of how to do a batch run of your system. And actually, let's just take a pause here, and just review before we go. And I'll give you a chance for questions as well. But let's just review what we've done. All right. So the first thing we did was we came to the reports viewer, and we had our indicators. In this case, moving average indicators. We have our scans, basically detecting the cross of these indicators. There are many built-in scans. You'll find under chart scripts, under system scans, many. Let's go down here. So these are all the built-in scans. You can open up any of these to see how they're coded, and thereby get a head start in creating your own scans. For instance, if you wanted the GL, that stands for George Lee power bar up, click on that, click on edit script. Here's a power bar up. This is how it's defined. And this scripting language here is very similar to Metastock formula language, MFL. So it's a formula language which is used in many trade analysis programs. So yeah, if you need to get an idea of how just general formula languages work, look for MFL. But always a good idea to come in here and just see how the things are coded. Henry was one of EdgeRater users, power user of EdgeRater, has created his own scripts for many, many things, and they're under HK scripts. And you can see how they're all coded as well, but there's probably 1,000 of these in here. You see all of that work that is done and generously shared with every EdgeRater user. A lot of these are indicators that you can just put on a chart, but there are some scripts in here. There are some scans in here too. Anyway, so got sidetracked there. Right, so what we did is we put on the indicators just to kind of visually get an idea of our trading system. We then went over to the entries and exits tab and generated for an entire trade list, an entire symbol list, the entry signals and the exit signals. We then went over to the trade simulation tab and set up some parameters for trading those entries and exits, and then ran that. That produced a trade list and also gave a trade summary, a P&L distribution, and an equity chart. And then we went to set up multiple runs with various parameters using Excel to set up this configuration file. And then we changed, each row represents one particular run. We gave it different tags, different parameters. And then we went back into EdgeRater into the templates tab to do the trade simulation batch run. And we chose that configuration file here and output the results to a different folder, chose our date range and ran that. And that generated these summary results here. So actually we covered quite a lot of information. But I think that's good to have that all in one place. So I don't think that I've ever done a webinar on all of that together. So we're just about out of time, but I'll look for some questions. There's a question here. Given all data presented in the simulation tab, could you show how one could use MAE or MFE for stop or profit target placement in the simulation tab? So after you've run a trade simulation, and you look at the trade list, yeah, so there are parameters in here that we didn't really talk about, but there's the MFE, that's your favorable excursion. MAE is your adverse excursion, which is basically how far the trade went against you for the adverse excursion, and favorable excursion, how far it went in your favor while you were holding the trade. So you could read this row here as overall, the trade lost 28%, but at some point, this trade was profitable by 6%. And it also was more lossy at negative 29%, but it ended up losing 28.69%. So that's how you use MAE and MFE. Now, you could choose to use those, take a look at those numbers when you're designing a system and say, well, the maximum favorable excursion I ever received, or the maximum adverse excursion was only, I say only, was 33%. Well, maybe I want to cut out those trades that had, before they, if they get down to 20% adverse excursion, I could choose to use a stop here. And I could choose to set in a protective stop of a fixed percent loss of 20% in here. Yep. And if I run this again now, and then I look at MAE again, then a lot of these are stopped out at 20%, but you'll still see some that have a 25% loss, not many, but there's a couple, and that must just mean that the end of day, that move happened in a day where it wasn't possible to, so it would be like a gap type move, if you understand that. You can always have a stop loss in the market, but you might not receive that price if the price jumps overnight. So you get gaps. So in this case, let's take a look at this trade. and you can see exactly what I'm talking about here. There was an entry here, and there was an exit based on this stop loss. But what happened was that was an exit that happened after a gap down overnight. So you could not have been protected at your broker with a stop loss here because of the gap. So yeah, a couple of hundred system scans. How can we identify what each one does? Let's take a look over here. All right, so in the scans area, yeah, so there are a lot of scans in here. Along with the name of the script, there's a brief description. That's really what you have to use is to get an idea of what it is. You can always, if you have an idea for a particular scan you're trying to do a Control F for find, and it will find text that's in either the name or the descriptions. That's probably the best way of doing it. So for instance, if you're looking for something to do with squeezing, you can type in squeeze here, and you can see how there are scans in here to do with squeeze. So anything with GL underscore at the beginning that stands for George Lee. So these are scans that George used to use. And then you kind of have to read the name is a shortened version, but the description in brackets should tell you what it's doing. So this particular one here is a PSAR breakdown during N bar squeeze. But yeah, there's no actual, let's say, PDF file with the list of everything in. You would have to come into the scans and take a look. Is there an acronym list in which MAE, etc. is there? Now there is a document. So if we go to, I'm not sure it's in there because it's been a while since I've looked at this, but if you go to the EdgeRater websites, go on to support and go to online documentation. All right, so there's a reference here for system scans, but it's not, let me tell you right now, it's not up to date, but I could look at this. All right, and this has got a list of the scripts that were in the system some time ago. But yeah, it's not a full list. Now, if we're looking for MAE, MFE, if you look at trade simulation quick start, there might be something in here. That would be the trade list report. And under trade list report, you may see, yeah, there's not really a definition of that. So if you have questions about what the different things mean, well, you know, we have regular webinars and you can ask or send me an email. These are very common with backtesting. So the things are pretty obvious. Are obviously entry date, entry price, symbol, exit date, exit price, number of shares, side, long or short, number of days held, number of trades, currently only one, but it's possible to set up a system that has more than one trade per symbol. For instance, if you're doing a averaging in, you might buy 50% of the position to start with, and then another 50% at a later time, then the number of trades within that one particular trade would be greater than one. Profit and loss percentage, MFE and MAE, you'll find those if you look online, do a search in Google. That's a very common term for backtesting. These are the percentage numbers, and then these without the percent are just the raw numbers based on the number of shares that were purchased there. And then the exit reason is pretty obvious. That's the exit reason for the trade. A lot of these were stop losses, but some of these were exited because the exit event was hit. Okay. All right. I think I covered a lot of stuff there. And the recording, I'll put the recording up, and you'll be sent, as you probably have found out now, when you sign up for the Zoom. It sends automatically a day later. We'll send a link to the recording. So look out for that. Hopefully you can get some good testing done. And then one thing I'm going to do another webinar, not part of this series, but this is just a separate webinar that I've called the best moving average. And you will find some unexpected truths about moving averages in this webinar. It does use another cool feature of EdgeRater to do with analyzing trade lists, which I will also show. But keep an eye out in your mail for a sign up for that webinar. And yeah, thanks all for coming. Hope you have a great weekend. We'll see you next time.